What's going on, guys? It's GBP baby. Welcome to another backtesting video. Today we're going to be backtesting last week. Now, the date today is the 4th of January, so last week was the week of Christmas, meaning that we don't actually have a Monday trading to look at. So we're going to be going through the Tuesday, Wednesday, Thursday, and Friday of last week. And I'm going to be looking more specifically at the London kill zones for entries. ICT started uploading his charted content recently, and there's quite a few notes that I need to go back and watch them. I'm actually going to do that after this and take some notes, because he speaks a lot about European Open and using these levels as entry points for trading executions and things. So I am going to be looking quite deeply into that. We are going to be using the 5 minute. I usually use the 1 minute if you've been watching my backtesting videos, but hopefully we can get the week completed in this one episode. So yeah, I hope you guys find it insightful. I am going to be staying on the mic the whole time and just going through what I'm looking at. I am going to be taking my time as well, so you gotta be patient, but standard, get comfortable, sit back, relax, and hopefully we can learn some things. So obviously we had no trading on this is the 25th. I don't understand why the markets were open between 5 and midnight. So technically we do have an Asian range in that case that we can use to our advantage. But generally speaking, this is the 25th, so it was Christmas Day, which is a holiday. But we're just going to go ahead anyway. Analyzing in these environments is a lot more difficult. Price action in general is a lot more difficult. So that's one thing we need to consider. It's been a while since I've done backtesting, and that's because I've done so much over the, as you know, I posted pretty much every single day throughout December with backtesting videos. So I haven't really spent much time backtesting. So it's important that I get back into the groove of things. Furthermore, what was I going to say? It's important that I get into the groove of things, because I need to keep my mind sharp. I forgot what I was going to say, guys, but it'll come back to me. So anyway, standard Asian range, mark out the midpoint, and then we look at how price treats the Asian range. What I've started to do as well is I draw out the Asian range I draw out all the kill zones into the next kill zone, because price, like I said, it uses it as like a barometer almost. So let's just drop down and have a look. So price straight makes a high, then we have a nice solid break in market structure here after taking out this swing high, so we can write buy side liquidity residing up there. Grab those stops, got a break of structure. I haven't done this in a long time, but boy do I miss this. So this is actually a breaker here. We'll make that black, because as soon as this candle closes, this is the breaking market structure, and then this fair value gap will act as the optimal trade entry that price trades into as we open. So we can draw this out as a fair value gap. Center back, and you can see how it trades down into this level, and then we consolidate and open up and run up, offering a sell. Price then continues to break lower, and you can see how we're constantly running out swing lows. So we got this swing low that gets taken out there, and then you can see we run down into these lows and then have a nice little retracement, pulling back into this range. It's another fair value gap. To be honest, I see this more. Yeah, this is another fair value gap, and then this fair value gap gets filled completely. Then we turn around again, high, low, higher, high. So this last down candle acts as a breaker as well, so we can bring attention to that. I don't want to put too much on here. Let's drop this down to 25%. 20% will do. This is a breaker. We're going to make this breaker blue. And oh yeah, that's what I was going to say. This video is coming out late in January. It might even be early February because I already have some backtesting videos lined up. So that's another thing. There's going to be like quite a delay in terms of excuse me. There's quite a delay in terms of like there's a lag behind the videos of when they're being filmed and when I'm posting them. So we can sell into this fair value gap because we've had a break in market structure. We've taken out buy stops residing up here, and now I'd be looking for a rundown into the sell side liquidity, which would be below Asia's low. But yeah, so yeah, you're gonna probably see this a while away, but it doesn't really matter. The content stays the same. We can sell also into this breaker. It's nice to see that this is pretty much left open. That's ideal. Again, the lows are constantly getting attacked. So we've got this low here that gets attacked as well. And then eventually we come out down here. So I'd probably get out of my position below this low, just knowing that it's Asia's low. But you can see we do dig deeper and trade down into this bullish order block. Like so. So we can just write bullish order block here. Now, one thing I do always mark out is the 3 a.m. time, and that's because at 3 a.m. there's always either a retracement or a reversal, and here, like I said, 3 a.m. hits and we have a retracement. Now, ICT in his recent videos, he was saying if we're bullish, we should be looking at that 3 a.m. opening time and trying to buy below it. Buying below the midnight candle is one thing if we're bullish. Buying below that 3 a.m. is a little bit more advanced. Like I said, I am going to do some research, and hopefully I'll have some videos explaining it a little bit more clearly, because I didn't actually take notes the first time I watched it. But what I'm going to do is I'm going to draw out this opening candle here, just so that I can see how price treats this level, because he said to look at how price treats these levels. So I'm going to put 3 a.m. open, and then we can put it on the right, and we'll make it orange, just so, actually let's make it black, just so that we know that's the 3 a.m. opening price. And then what I'm going to do on the next day, I'm going to do the exact same thing, because what I'm doing is I'm seeing, okay, how does price treat these opening levels, right? So we can even look at the opening of London, which is here, and see how we treat that. That's the 2 a.m. open. And it does seem like we're finding support in these levels, but obviously once we go into the Tuesday and other days of the week, we can see how true that logic stays. But anyway, so we trade down to the bullish order block, we start moving our way up. As after this, we simply retrace. Where do we retrace back to? Equilibrium of the range. So if we go from this high to this low, we come up to 50%, and then we turn around again. So all it's doing is returning back to equilibrium, nothing too crazy. It's also returning down into this wick, which is nice to see. 50% of that. Is this a breaker wick? Let's have a look. It's not exact. Well, low, high, lower, low, then we break high. This is kind of a breaker. But anyway, we return back up to here, still leaving a gap, suggesting lower prices. And then price breaks lower from here onwards. So we've got a high, a low, a high, a high. So this last down candle acts as a breaker as well. So we can look at that and sell into that if we wanted to run down into these stops as a short scalp. Remember, and also we are assuming that the low of the day is going to get made in London at some point. It doesn't. It gets made in Asia, in New York, but that's something for us to consider. So what I'm going to do is I'm going to write breaker. I do have to keep an eye on the time. Like I said, this might be split into 2 different episodes, which is fine for me because that's more content. But so make that red. I want to make this blue because that's where we buy back our positions. And then we're running down into this sell side liquidity right here where we'd release the rest of our stops. But yeah, like I said, 3 o'clock, we expect some kind of retracement. This could easily be seen as a reversal, but at the same time, we've had such a strong break in market structure, it's likely we are going to want to run to these lows. But again, context is everything, and like I said, the week of Christmas isn't exactly the best week to be trading anyway, so hey ho. So then we get to the end of the new London session. Sorry, this is London. Let me just make it clear for us. London kill zone. And now we want to look at the New York kill zone. So New York opens, we open below the 3 a.m. open, we run lower. I'm going to take note of this so that when we go into the Tuesday we can see how price acts. Anyway, we open below New York open, we move lower, and then we run down into these relative equal lows. This low and this low make relative equal lows, and you can see price wants that liquidity. It's also the low of London, remember, so we can take that into consideration. What I'm going to do is I'm going to make this line orange, and I'm going to type London lows. Because again, in his, like I said, in his recent videos, he's been talking a lot about how price refers to the session highs, lows, midpoints, and all sorts. Like if we look at the midpoint of this range, which is about here, you can see we're consolidating around that, and it's also where the 3 a.m. opening is. I'm gonna make this dash just so that it just looks a bit cleaner. And then I'm also gonna mark out the 8:30 bell, which is a news embargo. But anyway, we trade lower, grab those stops, then what happens? We have a nice, lovely reaction higher, running up, taking out this swing high. Once this swing high gets closed above, I'll be keeping an eye on it. That's a break in market structure. Break of structure right there. And then price finds support on top of that 3 a.m. open. And there's also a nice little fair value gap that becomes an inversion fair value gap. So we can type inversion fair value gap here. Then we trade higher, running out of these stops as well. Again, breaking structure. We trade slightly lower. There's a little low on this. I think it's like less than, it's like a pipette lower, and then we run higher. So in terms of entry, we could enter on this candle technically, as it does run below this low. It's not ideal. This breaker, low, high, lower, low, we don't really trade back into it, so it would be difficult. It would have been difficult to get into this move in general, but regardless, we'd anticipate a run up into the Asia range highs. Now we're anticipating that because we expect the Asia range to be used as like a buffer, so we expect the highs and the lows of Asia range to be taken. So we trade right through, look where we find resistance, we pull up, comes at 50% level and eventually takes out the high, and look how we stab through it. 1 down, 2, and then we consolidate just above that 2 a.m. opening, finding support with this fair value gap right here. Now you can see how messy my charts are getting and how quickly it's gotten this messy, but it is what it is. So that's that buy side liquidity grabbed. I'm just thinking, if we wanted to, we could buy the turtle soup. So we could buy the swing below here, which is quite advanced. I've never actually done that. And then we would sell as soon as we trade through that Asia high as a target for buy stops. We have the London close. We simply just pull back to the range, and there's the fact that we fail to trade lower than this 2 a.m. open, like we're trading back into this swing high, right? Volumes respecting this fair value gap here all throughout. So long as this continues to show support, we can expect a run higher in the new day, because after 12 o'clock I'm usually done anyway. So let's now start. Let's now put in the Asia range, excuse me, and we'll just move everything over like so. That should be 7 a.m. Perfect, and then we can start looking at this range. So here's the Asian range, same thing. I'm going to mark out the high. The high gets taken out as soon as midnight hits. So then what do we anticipate? The low to be taken. Now, one thing I noticed about London is that there's always some kind of, well, we've got the low created, but this is the manipulation of the entire day, right? So that's one thing to take note of. And look where we trade down to. We trade right down to the yesterday's Asia low, or yesterday's London high. 2 a.m. opens there as well. I don't want to keep drawing all the lines, dragging them out. Like, it is quite messy. I think we also traded to the midpoint of this. Let's see. Yeah, look at the midpoint of the New York kill zone, high, low. Excuse me. Midpoint, drag that out. We trade right down to that. So this is what I mean by how the sessions are all like connected with each other, so to speak. So we've seen how London traded away from the Asia session before attacking and running through it on the New York. And then now let's look at how the New York affects the next Asia session. So what I'm going to do is I'm going to draw out the high of New York. This is getting very messy, guys, I know, but to be honest, if you're struggling to follow along, apologies, it is what it is. But hopefully you can see what I'm doing here, and you guys can go out in your charts and do the same thing. So what I'm going to do now is I'm going to draw the New York session out, and we know that the midpoint of New York gets traded to in London. So here, so we find support on top of that New York, run out Asia's high. Then we run out stops one more time right as London starts. So we've run out these stops, relative equal highs here, and then we've also run out these relative equal highs here. So I'm going to write buy side liquidity up here. It's already been 20 minutes, which is crazy. And then we have a nice break. So what I'd be doing at this point is waiting for some kind of directional move. I want to see intent to go a certain direction. Here, this nice down candle shows an intent. We're running out this swing low and closing below it. That to me will be a break in market structure. Then again, we haven't closed below it completely. But the fact that we run up to this bearish order block and we respect it, what I'm going to do is I'm going to write bearish order block. I'm going to put respected just so that we know it's being respected. So we could sell into that. And what would we anticipate? Well, like I said, we've taken out the Asia range highs, so we can anticipate the Asia range lows to now be attacked. What I'm also going to do is I'm going to look at the midpoint of the Asian range just to see how we treated it as we traded lower. So let's sell into this order block as we trade into it, because we're excellent traders, guys. And then I'd simply get out. I say simply, like it's easy to do this here. And look what time we hit that. So another thing, time. Look what time we trade to the bottom of that. We hit that at 3 o'clock again. And what do we expect at 3 o'clock? A reversal or retracement. Here, we simply retrace right up back into there's a little breaker here, kind of. High. This swing low anyway is what I'd have my eye set on, because that's where we've got a nice break in market structure, trade into it, and a fair value gap. So this is a perfect place for price to trade back up to, and that's what we get here. And then we run lower, dig into 50% of yesterday's thingy. Let me look at yesterday's entire range actually. Let's see where we traded to on that. Oh, it's actually the optimal trade entry. So if we look at yesterday's range, the high and low of the day. So this is the low that was made in New York, and then the high was made at 3 p.m. You can see we trade back down into the discount of yesterday's day, 50% level, hit that optimal trade entry, and then look at the reaction off of that. So that's another thing. Looking at the days, the previous day's range. Very interesting. In fact, let me make a red line just so we know that's previous day's midpoint. So as we trade down into that, hit it, and then we trade higher. So in terms of entry for here, we've got a nice fair value gap after a break in market structure here. Classic price action right here. Break of structure, run down into a nice fair value gap here. So we could buy that. And I like to see that it's closed. You see how this candle touches that high wick there? That's a nice closing. We return to it one more time, classic. Again, the breaker usually gets traded to twice. Once on the way up, and then it will get returned to because there's a little consolidation here, original consolidation. Trade back into it, look at the respect of the 50% level. Wick slightly down below this low, nothing to be concerned about. We still have a nice breakaway gap residing here. That's acting as like an inversion fair value gap. And like I said, they're defending this level, this previous day midpoint. They've used this as a reference point to then send price higher. What I'm also going to do, again, I'm going to mark out, remember I was saying I'm marking out the 3 a.m. opening, see how price treats it, and the 2 a.m. opening just to see how price treats it. What I'm going to do is I'm just going to copy the last one I used. Now this is very messy. I apologize. But this is how we learn. You'll also notice that this video I'm not really analysing every single movement. I'm being a lot more free. A bit more fruitful with it. 3 a.m. and then I wanted to mark out the 2 a.m. opening as well. You can see we trade up to that 3 a.m. opening, and that's interesting. Look how we consolidate. We find resistance between that level. Maybe that's just coincidence, but as far as my belief is that the markets are rigged. Therefore, seeing consolidations at certain points like this, it can't. There's no such thing as coincidences to me. So if I can use it to my advantage or learn something from it, I'll definitely take note. So we have buy side liquidity residing up here. Why is there buy side residing up here? GBP baby, because this is the London high, and we're bullish. We've already traded to the midpoint of the last day. We've had a break in market structure, pull back to a breaker, and we're expecting. Let's assume that we're expecting to run higher. We have these relative equal highs here as well that we want to attack. So we're expecting a movement higher. So we can, like I said, if we buy this, we could even buy this as well. As soon as this high gets taken, we can start to trail our stop up to like this swing low. Interesting consolidation here. Like I said, I'm assuming, like I said, these two times, 2 a.m. and 3 a.m. act as like a filter. Because like I said, here when it was between 2 a.m., 3 a.m. and 2 a.m., we trade right through it, right? We trade through it completely and we find support on top of it. Here, same thing kind of happens. We trade through it, we find support on top of it, price doesn't come back down below there in a bullish environment. So there's things here that we're recognizing that we might be able to apply in our future positions and things. But I don't know, I'm just a speculator. So what happens? New York opens, trade higher, we come back down, find support on the bullish order block. This is a propulsion block. Let me write down propulsion block. Because why is it propulsion block? Because it propels price higher. We run out stops here. We run out more stops above here, as in we run out break structure. Last close candle for the down move, we drag that out, guys. Why? Because this is a breaker. How do we know it's breaker? Look at that return to it. We fail to return to it later, which shows when we fail to return back to, like here, we return back to the breaker. Fine. Here we failed to return back down to it. Obviously it's already on its way, which is fine, but it shows a level of strength when price fails to reach back down into certain levels. So that's another thing to take into account. Easier said than done, as in trading it. In fact, have we entered any positions on this day yet? So we've entered here and here. Where I'd like to enter as well, well, let's assume we now know that the 2 a.m. open and 3 a.m. open acts as a buffer and high resistance zone. We could buy into this order block as we trade down into a proportion block, assuming 1, we're expecting to move higher, 2, we don't want to see price drop back below the 2 a.m. and 3 a.m. open, because we're now seeing this act as like almost like a bullish fair value gap. But I'm not going to say too much until I've studied it a little bit more. If we don't want to enter on the bullish order block, we wait for the break. Where's the break? Here, run it once, twice, come down, breaker, so we can buy that as well. 3 a.m. I mean, if we've been moving again, we've been moving upwards the whole day. So it gets to 8:30. What are we expecting? We want to see some kind of pullback. We get a nice retracement back into this fair value gap. Perfect. Price wicks back down into this bullish order block now. This should now propel price. Again, proportion block. In fact, let me just move this one here like so. What I'm going to do is I'm going to get rid of this. And we can now buy. Let's say we buy that. And then we simply just wait. Yes, there's consolidation. And then we anticipate a movement even higher. This is a breaker. I just realized we've got a low, a high, a low, a low. And we do actually trade into it. That's what we're trading to when this price action comes back down. That's a breaker. Lot. So we can make that, put it on the right. So we could buy that, assuming we know it's a breaker and we know what we're looking for. Now, honestly, guys, actually, never mind. Excuse me. What I'm going to do as well, again, London high, which is basically here. We find support on that. Asia high as well. We found, again, we traded through it. We found support on top of that. So there's different confluences here, and then you can see we run higher and higher and higher until we have a reversal midweek, which is on the Thursday. Very classic price action. In terms of where I'd get out, as in scale out my position, well, do we have the context of here? Probably above this swing high 100, to be sure. I hate saying 100% when it comes to trading, guys, but I'd definitely get out here, because that's our buy side liquidity. So let's sell our positions as soon as we trade through that, like so. And then we'll go into the new day. So what I'm going to do is I'm going to do the same thing I did last time. Another thing I want to look at actually quickly, let's just see. 8:30 opening. If I draw that out. Interesting. Let's try this 8:30 opening. Close above it, and the price doesn't even bother trying to come back down there. Consolidation, and then we are now in Asia session again. So what do? Same thing. See, look at this price action. That looks absolutely disgusting, doesn't it? I am going to close this video off here, and that's because we are at 30 minutes, and I'd like to keep these videos longer than that. So thanks for watching, and I'll likely have the next backtesting video either out next week or tomorrow. So, peace.